Some key airline and shipping companies, they're reducing capacity for the second half of the year. What will the industry moves mean for investors? Here with some market hotspots is Helane Becker, transportation analyst at Dahlman Rose. Helane has been named one of the top 3 airline analysts by institutional investors for 9 consecutive years. That's quite a record, Helane. Thanks for coming in. So obviously, I think top of everyone's mind in recent weeks when you look at the airlines has got to be fuel prices. And indeed, we haven't seen airlines sort of track with the overall market, which has bounced. Airline stocks have been sort of in a downward trajectory. How are they dealing with these higher fuel prices?
Right, good questions. Well, the key element right now is raising ticket prices. So far this year, we've seen 25 attempted fare increases, and we've seen at least part of 15 hold in the domestic market. And in the international market, we've had 75 attempts at fare increases, and about 49 have held. And when I say partially, I mean, they might have tried to raise fares $20, but only 10 of it held, or they were able to put some fuel surcharges in place or something like that. But definitely they're raising prices. That's number one. And so far, they've been able to recoup about 70% of the increase. The other 30% has to come in the form of less capacity. So we're definitely seeing declines in capacity in the second half of the year. I think passengers are going to be surprised. There will be fewer flights and larger planes.
I mean, isn't that not necessarily a bad thing, though, when you look at the airlines? Over the past several years, as we saw the economy go down, the airlines did cut way back on capacity, and they said, we're going to stick to that. We're not going to get too crazy with capacity. And then, of course, they always kind of creep up, even when they say they're not going to. So is this forced capacity reduction a good thing for their business?
Well, in a lot of ways, it feels like 2008 all over again, when oil prices were going up during the year and airlines started to cut capacity in the second half of the year. The difference is that we were heading into a pretty ugly recession. Right now, we kind of think that we're in a recovery, and certainly load factors are holding their own. The real risk that we see is that if you're traveling now from a leisure perspective, you probably booked in January or early February before kind of the latest round of fare increases. But if you're thinking about traveling this summer, you may be faced with sticker shock. So you have to be flexible with where you want to travel. And if you're willing to be flexible, then I think you can find some good deals.
And I'm curious, when you say that the price increases don't stick, I mean, how does the airline judge as to whether it has that ability to pass on those higher prices?
Right, well, 2 things happen. So one airline will lead a fare increase. So late last week, American led a fare increase, and United and Continental quickly matched, but then Delta didn't match. So over the weekend, it was rolled back. So somebody else will try again tomorrow or the next day by raising fares. I think last week they tried $20. This week they'll probably try $10. So they'll keep pushing until somebody says no or yes. And then the other thing that happens, of course, is they look at forward bookings. If bookings start to dry up, the last thing they want to do is fly empty planes, around now. So they'll cut fares again.
Now, when you look overall at the airline industry, you actually like United Continental. That's your preferred pick. Why that one? I mean, how are they coping with this difficult environment right now?
Yep. So if you think about them, they're in a really unique position, unlike all the other airlines that haven't done a consolidation. Delta already did a big part of theirs with Northwest, but yeah, they still have 127 aircraft they're taking out of service this year. We estimate at United, the United Continental combination, they have like 300 aircraft they can take out of service. And when you think about their hubs and where they're located domestically, so LA, San Francisco, Denver, Chicago, and Houston. And Denver is really not what we would consider to be a high-yielding hub. There's a lot of low-fare competition in the market. It's very leisure-oriented. If you're coming from anywhere in the Pacific Northwest and going to South America or going to Asia or going to Europe, you're going to have to connect somewhere, and Denver just doesn't do it. So we think over time, Denver's going to be more of a focus city for United, and they'll take a lot of that capacity and they'll redirect it to some other markets. We're seeing a lot of 50-passenger planes coming out to be replaced by fewer 70-passenger planes.
Okay, Helane, unfortunately, we're going to have to leave it there. Thank you so much. We'll keep an eye on UAL for that reason. Thank you so much.